which has happened mainly coming from.
Good. Thank you very much for being here today. You just led a very interesting conversation about multifamily and single family. Very busy, very hot discussion. But before we go there, can you share with our viewers what you do exactly at JLL?
Thank you. Hi. So I look after what we call living capital markets at JLL. So I have oversight of the student co-living residential investment. So as you touched on, differentiating that between single and multi, and then the later living and healthcare teams. But the majority of my time on the ground is spent in the build to rent space. So single and multi-family housing.
Perfect. We continue to see a huge demand when it comes to single and multifamily. Uh, is a very hot topic for sure. But there are some challenges regarding developing new products and so on. What could you share with us?
Yeah, I mean, unfortunately, with a government chasing increases in housing output, we've got a sort of bit of a perfect storm in terms of obviously the outward yield curve, additional interest rate costs, lots of challenges I hear from developers and contractors in the space around gateways, and obviously the importance of bringing in additional regulation around building safety. But there are certainly distinct logjams in the process that's creating a lot of challenges, that's adding an additional tier of complexity to viability. When we need to be producing more of this stock, and there is an investor appetite for it. So yeah, it's a really challenging time, particularly in the multifamily space at the moment.
Absolutely. And because of that, maybe you can tell me more about that. But we see the last couple of years trend, which is not a trend anymore, is a reality of big players looking to the single family acquisition and paying more attention to this kind of asset classes. Uh, what could you comment on that?
Yeah, I mean, it's very much the center of the panel session just done. Real recognition that multi has a place to play, really difficult to get into at the moment. So there's been a big pivot, I'd say, over the last couple of years in particular. I mean, obviously there were some sort of leading protagonists out there. So PRS REIT, Sigma,
Correct.
very much early adopters in that space. We've been working very closely with Lloyd's Living, who've built up quite a significant portfolio. Blackstone being very active in the space has been commented on over the last couple of years. But we're also seeing new capital in, so likes of NPS investing behind Long Harbour, long established multifamily specialist and ground rent historically before that, and people like CPPIB coming in as well and putting a lot of capital into the market. So there's some really interesting movements in the single family housing space, and I have no doubt that we're going to continue to see a lot more to come. I suppose ultimately that sort of balance with the house builders at the moment, where rates of sale, challenges for the in rates of mortgages, that's affected rates of sale, the ability for them to then treat with large scale investors. It's probably a nice balance there in terms of matching out that opportunity.
Do you see big buying opportunities then for those players?
Yeah, I
Is
mean,
this the right time?
yeah, there's certainly a willingness. We talk to a lot of house builders, and there's certainly a willingness. Many have actually sort of pivoted their business plans to actually cater for this growing demand from the institutional sector in the single family housing space. We're certainly, again, I think it'll be interesting to see how SMEs sort of embrace the opportunity as well. I think that's probably a second phase. Yeah, I think that there'll be a lot more to be read about over the next 12, 24 months in the single family housing space.
Interesting. Let's talk about market behavior. Do you see any new trend or anything emerging from the conversations for the next 12 months? Or where do you see us in 12 months' time? Will you see anything very different from what we see now?
I think we're just on the outset of seeing quite a lot of activity, particularly in the sort of first, second generation build to rent space. People crystallizing their positions. There's also a significant amount of stock available from registered providers who are focusing on what they often term their core business and crystallizing their positions in existing market rented portfolios. So there's quite a lot of activity on that. So that, again, I expect to see quite a lot of during the course of 2025.
A final question. We have been spending the day here today. In total, 270 people passed through the discussions here. A lot of conversation, everybody getting ready for the year to come. And if I can ask you to share from the discussion that you participated, but also from the conversations, is there any, if you had to pick one key takeaway from the atmosphere that you feel here at the event today, what would be your key takeaway?
I would say from a personal perspective, real engagement. There's a real great interaction. But I suppose speaking within the subject areas in which I specialize, that constant theme we hear about capital wishing to be deployed in the living sectors. There was a great presentation at the start of the day around what I consider to be the traditional investment markets. Keep hearing about this wall of capital looking at living investment assets, and that's something that I've certainly picked up today. Real engagement in terms of trying to understand where those opportunities are, particularly in the single-family housing space.
Perfect. Simon, thank you very much.
Thank you.
Acquisition which has happened